Hey there, traders. What's going on? Jamie Setley here. It is July 20th, 2021, and I wanted to take a look at Japanese equities and the implications for yen FX. So we had a big reversal today in so-called risk markets, risk on, risk off. We really have started to see over the last couple of um, weeks, and it really hit ahead yesterday with the sell-off in again so-called risk. The traditional yen crosses tumbling while equity markets tumbled. So today's reversal was interesting in that context. And this is the Nikkei. So the Nikkei on Monday, we took out that low from May, and in fact, price actually traded down to the lowest since early January. You can see here, barely tagged it, and then a big reversal, right? So what that brings to the table is a possible kind of bear trap, failed breakdown, if you will. Even if it's just in the medium term, we could just be in a, kind of a wide swinging range here, right? So with that, upside, look at, initial resistance up around 28,300. We'll see where the 50-day is. You can see that the market has kind of resisted near the 50-day, near the last, at least near the last high last week. So nothing more, nothing less there, and then kind of reassess. But again, what about the implications for yen FX? So first off, if I were to bring in a chart, let's see here of, let me just do this real quick. Bear with me. I'm going to bring in a chart of the Nikkei and dollar yen so you can kind of see what I'm talking about. All right, hold on. Okay. All right. So okay, so yen crosses in yen FX. All right, so we've got here in the candles, color candles, you can see that is the Nikkei, and in black and white candles, I've got dollar yen. So you can see how they've really started to trade together over the last couple of months. This is the April low here, and rally had a divergence at the top, and then obviously over the last couple of weeks with weakness in dollar yen and weakness in the Nikkei, they've been kind of spot on together. So again, let's say implications for yen FX if indeed we had a false break there. There are two yen crosses that I find very interesting at this level, at least to play a short-term bounce. One is Kiwi yen, and you can see here Kiwi yen. Okay, we tagged that 200-day average today. That 200-day average was great support back in June, well, I should say June, August, and September of 2020. So this is going back a year plus, and it's the first time we've tagged that since September. So been a while. Also, I like the fact that we did reverse here, put in a big call it a hammer, a doji, what have you, big long lower leg on that candle after taking out that March 24th low. And again, you've got a nice little channel here too. So, if we're just playing a bit of a range here, you could see two levels to focus on, 76.60s roughly former support. And if you got a bigger bounce, of course, you've got the upper channel line, probably in line with, former support there, near close to 78. So, with where we are right here after today's reversal, the low against that low, looking up towards 76.60 and notably 68, you've got pretty solid reward to risk if you're looking to play a small bounce, and you know clearly where you're wrong below today's low. The other one is pound yen. Now we did not reach the 200-day average on this one. That's okay. But what we do have, which is interesting, is trendline, right? Trendline support back to the March 2020 low, right? And then extended off the September line. You can see that was support back in October and December a number of times. So this is what we would call a confirmed trend line, right? It's a bit of a diagonal, if you will. So bottom line, we hit support, also tagged that March 24th low and reversed and put in a bullish candle here. So with pound yen, you know, as far as where you're looking on the upside level, I would be looking towards initially, again, just off the lows here would be probably that low from June 21st, right? You can see here it was also support back in May and support back in July, and that's going to be 150, 130. So again, decent upside there as well in terms of, you know, risk against the low today. So those are two yen crosses that kind of caught my eye, given the failed breakdown and reversal from support, if you will, in the Nikkei. All right, so good luck. Again, Jamie Setley here with Scandinavian Capital Markets and SB Trade Desk signing off. All right.